Okay, so today we're going to look at evaluation of internal controls. So all aspects of internal controls, how you evaluate the controls, just gives us a brief introduction so that we know exactly the direction that we're going to be heading as we are tackling the more complex parts of auditing. So now,
Okay.
yeah, so now, the question that we ask, the first question is, Um, what are tests for controls? Just a minute, let me move this. Supposed to be up there. Okay. So, what are tests for controls? So, tests for controls, these are carried out, or rather, these are tests which are carried out so as to gain audit evidence that the accounting and internal controls that prevent, detect, and correct risks of material misstatements are functioning properly. Then, two, internal controls have been functioning properly during the accounting period. So, it's basically about us obtaining audit evidence, which is going to allow us to understand whether the controls that prevent, detect, and correct risks of material misstatement are functioning properly. At the same time, we can also know that the internal controls during the year they have been functioning accordingly. So, test for controls. This is just basically us. We're trying to prove we're trying to prove and we're trying to assess are the controls that management has put in place working accordingly. So all those controls that are put in place that prevent, detect, as well as correct misstatements, are they working accordingly? I remember there was some one time you said no auditors come, they ask you, how do you do this? How do you do that? No, so it's them testing the controls of the company. So, for instance, they come and ask, saying, are there segregation duties when it comes to receiving and posting payments? So, all those are just means of testing the controls whether they are functioning accordingly. So, now, what are the tests for controls? What procedures do we use? So, one, we can inspect the documents which support controls so as to obtain evidence that the controls are functioning properly. So, this is just us, we get the ledgers of the company, we inspect the ledgers so that to see uh, the transactions are recorded according to the way they're supposed to be recorded. Then inquiries is just asking management or asking employees for relevant information. For instance, we're asking, where is your inventory located? How do you carry out your inventory count? How often do you count your inventory? When it comes to fraud, we ask which areas of the business uh, um, are vulnerable to fraud. Then we ask, okay, these transactions that we found in the business which don't have any audit trail, uh, who's who are you paying at this particular day? So all those are inquiries. Then reperformance of controls. So what is reperformance? This is where the auditor performs some transactions that the accountant in the client's company has already performed. So, for instance, bank reconciliation. So, bank reconciliation is performed on a monthly basis. Then, us as the auditors, we go and reperform bank reconciliation. We do it again so that we see if the accountant in the company performed bank reconciliation according to how it's supposed to be performed. Then examination of management's views of internal controls. So we just examine what is the culture of management in relation to internal controls. Are they hard on the employees so that they follow these internal controls, or maybe they're a bit reluctant? It's just us examining the view and attitude of management in relation to internal controls. Then testing the controls which are carried out on computerized systems. So nowadays everything is computerized. So we also need to control. Or rather, we need to test all those controls which are computerized so that we can be able to obtain audit evidence. Then observation of controls being operated. So observation simply means an activity is being carried out, then the auditor is present, is observing. So the best example is the inventory count. So the way your company carries out the inventory count, the auditor is present, just watching how you are counting that particular inventory, and that's what's called observation. So when you're observing, you obtain audit evidence, and when you obtain that audit evidence, you take it to the head office, which is going to inform the opinion that the auditors are going to express. So now, test for controls. The auditor must consider how the controls are carried out. So this is just for knowledge's sake. So the auditor needs to needs to understand and consider how the controls are carried out. Then two, the consistency in which they are carried out. Then three, who carries out the controls. So how the controls are carried out, how are they performed? No, the consistency, how frequent, what's the frequency of carrying out those controls? Then who's in charge of carrying out that particular control? Is it the accountant? Is it the procurement officer? Is it the security guard? So that we just get an understanding. Then there's also another way that you need to understand very well, which is a deficiency in internal controls. So most of the times when you're covering questions in relation to test for controls or substantive testing, they can ask you questions in two forms. It's either you're given a scenario where you need to detect the deficiencies in the internal controls, or you're told to suggest the internal controls for a particular company. So you need to understand what deficiencies in the internal controls are. So deficiencies in internal controls, they're basically they occur when the internal controls are designed and implemented or operated such that they do not effectively prevent and detect and control material misstatement. So if they don't detect one, they don't prevent or control misstatements on a timely basis, then there is a deficiency. So deficiency is just, the internal controls are not functioning as appropriate as they are supposed to be function is, then that's the deficiency. So for example, I'll give a typical example of segregation of duties. If you're auditing a company, or you've been given a scenario where one person is the one that receives payments, the one person is the one that um, records those payments, or the same person is one that balances, the same person is the same individual who takes the money to the bank, then you can say there's a deficiency in internal controls. What's the deficiency? There's no segregation of duties, and the result is there can be fraud. And what's the result of fraud? The cash amount in the financial statements is going to be accurate. I don't know if you have any questions so far.
No questions.
Okay, so there are internal controls in a computerized environment. So this is also something that's not as important, because I haven't really seen a lot of questions in relation to this, but it's something that you need to know. So there are what we call the general IT controls, then the application uh, controls. So general IT controls, these are policies and procedures which apply to all computerized systems or applications in the organization. So general IT controls, they encompass all the IT uh, systems in the particular company, right? So everything that's applying to the company on a general basis is what we call a general IT control. So they are made up of hardware, software, and manual procedures that shape the overall control environment of the company. They provide a broad security framework for organizations, then applies to the organization as a whole. So, for instance, I remember when we went to attend the orientation for investing in government bonds and treasury bills at Bank of Zambia. So Bank of Zambia, whichever room that you get into, you need to use a card, right? So when you're opening a door, you always need to use a card. Without the card, you
Yeah.
can't open a door. So that's an example of a general control which affects the whole organization as a whole. So that's an example of general IT controls. So yeah, they apply to all aspects of the organization. They include hardware, software, as well as manual procedures, right? So that's the typical example that I've given. Or the other general control is where for someone to get into the business, for someone to get into the premises of the company, maybe they need to register their name electronically. They register their name. Okay, this is my name is this and this. I'm here to see who and who. So those are general IT controls. These are basically they apply to the whole organization, and they are they are made up of hardware, software, as well as manual procedures. Then application controls, they are more specific and they focus on a specific portion of the organization's information system. They address specific risks in financial systems. So I'll give an example where I don't know which software do you use for posting transactions?
We use SAP.
SAP. Okay. So I'm
SAP. SAP.
SAP, yeah. So
SAP Revolution.
SAP Revolution. Okay,
Yes.
I'm guessing each and every accountant has got an account of their own, and they've got their own password which they use to log in into their account. Is it so?
Account. Yes.
It,
Yes.
it is so, eh? Yes. So now
Mm-hmm.
that control of putting in your password, right, is an application control. So
Mm-hmm.
when there's no password, when you are not there, and somebody else doesn't know your password, they can't open your account. They can't change transactions. It's only you who has the right to change the transactions. So that's an application control. So it includes three main components. One, um, input controls. These are authentic information entered into the system. Then two, processing controls. They verify information being transmitted. Then four, output controls. They validate information being sent out of the system. So I don't know if you have any questions so far. Hello? Hello?